Hey there, welcome to the Common Sense Show, and I'm excited for this interview today. I say I'm excited every time, but that's just because I have cool guests every time I actually have an interview on the show. Today, I am talking about business exits. If you've watched this show, you've known that business exits are one of my favorite things to talk about with business expert Jessica Fiakovich. One of the things that we're going to talk about is how and what and why and all those things associated with it. You may be thinking that your business is too small to exit right now, but it probably has a lot to do with the fact that you haven't even planned or thought about how you could actually sell your business eventually. And so we're going to talk a little bit. It's a little bit of a tongue twister. A little bit about how that's going to actually uh, be able to actually help you achieve your goals and get the life that you want. Um, and, and that's the whole purpose of a business, right? The whole purpose of a business is to serve your life as opposed to the other way around, you serving your business. And we're going to talk a little bit about that to Jessica as well. I am curious. I have questions and I'm looking forward to fleshing out this conversation. What we're going to do right now, though, is we're going to invite Jessica to the show. Jessica, welcome to the Common Sense Show. We have been trying to get together for some time, but you're finally here.
Yeah, I'm so excited to be here, Micah. Thank you so much for having me.
Yeah, no, I knew as soon as I was contacted by your agents that I wanted to, have you on. Just your background was really good, and we talk a lot about systematizing your business. So my show is about turning businesses into income producing assets.
Mhm.
And oftentimes income producing assets, people think about real estate, but where I sit, it's important for businesses to become income producing assets because they have systems and processes in place where the owner doesn't have to go in every single day. They can check on it, they can make some modifications, they can work on their business, and more importantly, they can get to the business where it's actually viable for sale, because that's ultimately the goal, which is to fulfill the promise to yourself at the end, is to get the life that you want. So I'm
Yeah.
excited about this conversation.
Yeah, me too. And I have a similar philosophy actually. In my book, it's called "Getting the Most for Selling Your Business." I talk about how most owners treat their business like a baby,
Mhm.
and is an extension of themselves or their family, but it's actually an asset. So use a lot of the same the same theories and the same strategies that you're talking about.
Amazing. So why don't we start by you just introducing yourself to our viewers and our listeners and tell them a little bit. There you go, a little bit about yourself. That's a tongue twister for me. I
It
can't.
really is a tongue twister. I haven't thought about that, but it is. Yes, and happy to. So, I started my entrepreneurial journey at 25. So I'm what some people would call a serial entrepreneur. I've been in a few
Mhm.
different businesses and a few different industries. My first business was in the wine and spirits industry, and I got into that business kind of by accident. Started a very successful business, and about 30 months later, decided to sell it because I wanted to move back into a more B2B career space.
Mhm.
And through the sale of that business, I learned about mergers and acquisitions for small businesses. I didn't know you could sell a small business or a small to mid-sized business. And that introduced me to my journey over the last decade of M&A and helping small businesses prepare for and eventually exit their companies. So I've been involved or overseen over 850 transactions at this point. And like I said, primarily involved in helping small to mid-sized owners transition from that growth mentality to an exit mentality and ensuring they get the most money for their business.
That's awesome. That's a lot of transactions. So you certainly have quite a bit of an experience when it comes to the nuances, and that's when it comes to acquisitions, mergers, moving on, selling your business. I had Ryan Gorel onto my podcast. He also specializes in growing businesses through his is acquisitions. Um, and there's always the unexpected thing that comes up that business owners aren't ready for, that kind of flattens them. And it's what's funny is that you should always think that there's going to be like a bump in the road, but what is probably the most common hiccup or the most common outside influence in your opinion, that affects the business's exit when they're at that point? We'll work our way. We're going to be like a Quentin Tarantino movie today. We're going to go from one end to the other, to the other,
Yeah,
to the other.
I love Quentin Tarantino movies. Great. I love Ryan too. Ryan Gorel was actually one of our banking partners for a long time before he moved into his new role. But I would say this might surprise some. The biggest outside influence that affects that exit timeline is actually our personal lives as entrepreneurs. So the number one reason people sell businesses, it's not a financial reason, it's not opportunity, it's not because it was part of the plan. The number one reason is burnout, right? So and especially I think like you were talking a bit about like if we're having businesses that run us, right?
Yeah.
And they're not businesses that are producing time, freedom, and choice for us, we get into that burnout routine very quickly. And that is really the biggest outside influence that affects our exit, because then we become a circumstance of the burnout. And we have to sell at a certain time just to protect our personal, our emotional, our mental health. And that I think it's kind of like an outside influence, but it's internal, but it's something people don't think about related to a business exit.
Yeah, that is interesting. I mean, on some level, all of us business owners have had to deal with the fact that burnout is real and burnout happens. And what I found is that when so I've acquired 2 businesses over the years, and when we were going through the process, what I found was that when it was time for me to get information from that burned out business owner, information was hard to find, incomplete, missing, nowhere to be found. And obviously, one of the most critical aspects of being able to sell your business that somebody else wants is true, fair representations of things like revenue, sales, so that a person who's coming in to buy a business has a good idea of what they're going to get, where they need to apply capital when they first build it, where they have to apply pressure and strategy to help it grow. Why are so many small business owners afraid of putting together comprehensive numbers and packages when they're, before they get to the point where they're burned out and ready to like jet?
Yeah, I mean, there's a fear component, right? And I think once you have all the numbers, the documentation, like the pre-due diligence files in front of you, like the truth is black and white, right? So I think the fear component comes into like what is the honest opinion of our business, like what was honestly going on in the business, what's really broken and not working, and to face all of that is sometimes scary versus hiding behind it's just sitting in QuickBooks or in a pile of paperwork that we'll review someday. So I think there's definitely a fear component. I think there's also an overwhelm component to that too, because a lot of business owners rely on themselves for a lot of that administration part of the business, the financial, the legal, the stuff that goes into that preparation for sale. And because they're overwhelmed, they're so focused on urgent things going on in the business that these more important things get pushed to the back burner. And so then when they get a list from a buyer or a consultant like me who's like, oh hey, it's time to prepare for sale and all of this is what you need to get in order, it's just overwhelming because they feel like they're starting from scratch and they have to dig out of those piles of paper. So I think it is fear of seeing what is truly going on in our business and where the red flags are. And the other part is just complete overwhelm of like, where do I start? How do I even get this all done?
Yeah. So that's interesting. And obviously that's where coaching comes in, and, but there's a gap between the person's ability to make the choice that they want, coaching and organize themselves and be serious about putting themselves together and their businesses together, because putting yourself together involves putting your life together in business. It's funny how they start off at 2 separate things and then they become intertwined. And then that process of them being intertwined ends up leading to you having to reorganize your life and your business quite frequently, and especially when you exit. So there's something that you specialize in, which I find fascinating. What's related to this, which is you say that you can help prepare businesses for sale in a year or less. That seems like an interesting claim to fame. How do you do it?
So, I mean, ultimately, I think one of the things you started with at the top of the show is like people may be questioning whether their small businesses are worth anything, right? And so, one, I want to just clarify myth that's out there is that you have to be a certain size or have to have a certain amount of employees to be desirable for sale. And the truth is that all businesses are valuable. There's a value to every single business, and there are small businesses, thousands of them that sell every year that are very small and the owners are very involved in day-to-day operations. Do they sell for millions of dollars? No, but they sell, right?
Right.
So that's a kind of first starting point. And then in a year or less, what we're looking at doing is we're looking at cleaning up some of those due diligence items. So due diligence is like an inspection period for a business that a buyer goes through. And in a year or less, we're just cleaning up those due diligence buckets, which is usually financial records, legal documentation, transition plans, and expectations for the transactions. So going through that and ensuring that the deal's actually going to go through. It's not as much about increasing value or maybe even cash at the closing table for the seller, but ensuring that the deal does go through. And does pass the buyer's muster through those due diligence and inspection items.
That's a very interesting distinction, which is not increasing value, but because that's not really the time to increase value, that's the time to get exactly what you can get to make sure there's nothing outstanding. And it makes an interesting point, in my opinion, which is that business owners, I know it's hard, and there's a lot of sole proprietors out there who are solopreneurs. And you talked very eloquently about how there's a lot of small businesses out there that are smaller that will not sell for millions of dollars. And, everyone thinks that their business is going to sell for, $10 million at some point.
It's always 1, 10, or 100 million. Like it's never, I never talk to somebody and they're like, my business is worth $600,000. No, it's 1, 10, or 100 million always.
Right. Exactly. Well, that's the thing. It's just like, I don't know why I get the $1 million thing, but at the same time, it's like, if you can get the value for your business that it costs to buy a house, you did pretty good.
Yeah.
And that is the value in cash of your business, independent of any kind of real property, assuming that you don't have any mortgage or you don't own the property itself, which you'd probably end up being the landlord and renting it out anyway. But the point is that you can walk away with the same cash that a person would get from flipping a property or whatever. I mean, it's a smart thing to do, and which prompts people to get into businesses, build them up, and then flip them, right?
Yeah.
Just like real estate. That's a whole different show.
Yeah. We'll talk about flippers a different time.
We're gonna have Jessica back to talk about that because I'm actually interested in that topic. But so it's not the time to build value, meaning that it's not the time to go out there and try to artificially increase your customer base to try to show more profit so you can get a bigger value. So that means that there is a time to build value, knowing that you want to exit. When is that time?
At a minimum, it's 2 to 5 years in advance. So when you look at how values are determined in companies, it's a complex process, right? But they usually, they being the buyers and the financiers, usually will look back at a period of somewhere between 2 and 5 years history of what the business has done. So that really determines what our lead time is in preparing higher valuations. Is we've got to have 2 to 5 years runway to show that history of proven increases to get the maximum value. So, and it depends on industry a bit. It depends on your growth rate. Obviously, the more time you give yourself, the better. I talk to people a lot is like, hey, if you put in place a strategy for exit from day one in your business, it doesn't mean you have to sell, but it does mean you're building a business that's sellable at any time. But if you haven't done that from day one, 2 to 5 years, starting today is kind of like the next best. So,
yeah, that makes a lot of sense. I wanted to test the market to see what it would be like if I put my business for sale. So I did. I did it.
Interesting.
About a year. I did it during the worst time to actually sell your business. It was like about a year and a half ago. And I have one of my businesses is in the fitness industry. So, So it wasn't a great time to do it, but that wasn't the point. My point was to stress test my business to see what the business brokers or consultants would ask for and what I had to offer to put everything together. And I was, fortunately for me, I was a lot more prepared probably than most people.
Yep.
They asked for two to, like you said, 2 to 5 years. I think it was 3 years on average. They asked me for profit and loss, balance sheet, and they didn't ask me for bank statements, but I'm sure they would have had we gone back that far. But the bottom line is I had everything already. Sorry, not bank statements, tax returns.
Yep.
Yeah. So I had everything prepared and in buckets already, and it wasn't that hard. It's just putting together the effort to kind of organize everything and structure everything. And I wonder if a lot of small business owners don't really want to do it because I think, to your point earlier, that they're going to have to face going over financial records and trying to and actually seeing what their company is bringing in. And I think as small business owners, we kind of start to we make ourselves really busy in our business so that we don't have to face the work of what we need to do to take our business to the next level, right? To make it income producing like an asset. And because it's hard, it's not easy, and it's a lot of nuanced stuff. That's my jam. That's where I live. Yeah. Obviously, you live more close to the end of that cycle, but how can a business increase their value and their profitability, in your opinion, to get them to that point, to slowly do that march, that 2 to 5 year march to selling?
Yeah. So the first step is actually focus on profitability, right? Mm-hmm. So I mentioned evaluations are complicated formulas, but essentially the value of a business is a multiple of its earnings, as defined by EBITDA, or there's another earnings number we use called seller's discretionary earnings. And so the first step is to maximize your profitability, maximize your earnings, right? And reducing your expenses. So a lot of business owners automatically, they're like, oh, I need to increase value, I need to grow, right? Mm-hmm. And actually it's the opposite. Is we're still going to focus on growth, but the first step is let's pull back and let's look at our expenses and let's try and get our profit margins as high as we possibly can, because that's going to give more earnings that applies to that formula. And also the more profitable business, the higher the multiple is, right? So that's the first step, is actually profit analysis and profit maximization. Then you look at growth, right? On top of that. So now you're growing at a higher profit margin, right?
Yep.
And then the last bucket is to take it, like you say, to that asset, income producing asset, but removing the owner from the business. Yep. So strategically removing the owner from different roles in the businesses that create more risk or liability for a future buyer, right? So those are really the three buckets that we're looking at. I try and focus on that profit maximization first, and then growth and owner role and owner removal kind of go hand in hand. And it depends on the business, which one is more important to a business than another.
Is there an amount of money that you suggest or that you believe it's just not worth it to sell the business? So as an example, if a business is generating, let's call it $150,000 a year, which is probably most small businesses in the U.S. Actually, maybe I think it's less than 100,000, slightly less than 100,000, but it's around there. And their profits. Is there a specific? Are there targets that you think about where it's not worth it, or just get as much cash as you can and then close the business? What's your advice on that?
Yeah. So I have a different perspective than almost all of my colleagues. Like almost all of my colleagues, whether they tell you outward facingly or not, there will be a minimum size business or deal that they work on. I don't believe that there's a minimum, right? Now look, whether you go through, a consultant like me or work with a broker, there's a minimum size that's worth it, but you can always pursue like for sale by owner. There's websites where you can sell off assets, but like how I think about it is if your options are close your doors or take $15,000, right? The choice should be clear, right? It's get something for what you're exiting for, like whether that's $10,000 or $15,000. So it can be a starting point for whatever your next venture is, or helping sustain your lifestyle. Like obviously that's not an ideal situation, but get something rather than just close the doors.
I love that you said that. So I always tell stories. So like I got my real estate license 2014. That is 9 years ago. I'm getting old. And I it was I attached myself to a broker that did rentals and sales, and I did it primarily for, I got my license primarily for my education, because I
Mhm.
knew eventually I wanted to get into real estate. So it was less about me actually becoming a real estate professional in the sense where I would be a real estate salesperson, and
Yep.
more just an investment in me.
Right.
And I, for 1 month, I took a month off of my business and it just ran itself. And what I did was I took everything. So like I started with rentals, and I rented things that were like $800. I rented things that were like $3,000. I rent this, like the whole spectrum. And in Boston, we have the whole literally the whole spectrum.
Yeah. Yeah.
One of the most expensive places in the country. And there was a whole broad like deposits and what I get and all the other stuff. I ended up making over $5,000 just renting everything. And it was
Yeah.
amazing. And it was because I didn't just, some of the other agents would only rent things, for instance, that were like $5,000. But they would have to sit there for 3 weeks until one of those walked through the door. Whereas me, I had something every other day, and it was like a slow roll to get it. But it's just like, you're right. Take what you can get. And then it's 15,000 that you can just take and flip into something else that could make you another. If you're really an entrepreneur, you'll take that, whatever that money is, that can be your deposit down on your next business, or a short-term Airbnb rental property or something like that.
Yeah, it's something. It's something. And then also like when you do go through the sale process stuff, you can get relieved of liabilities, right? So say you have a brick and mortar store, right? You've got a lease liability. So you can't, in most cases, can't, unless it's the end of your lease, you can't just close the doors and walk away. There's a liability associated with that. So by selling too, you're also transferring those liabilities to somebody else, and you're starting with a clean slate.
Yeah.
But yeah, like I said, I think it gets lost. And yeah, there are brokers that won't take really small deals. There's consultants that won't work with really small businesses, but that doesn't mean that your business isn't worth anything. And there's still plenty of resources and platforms now to get some amount of money.
So let's talk about owner's draws, because I think that some people, we could talk about a structure of a million different kinds, but let's talk about the most common one, which is single member LLC. I'm
Mhm.
assuming, or sole proprietor. Typically, there's owner's draws because you can't become an employee of your single member LLC according to the IRS. So all those draws get built back into your profit, because in theory, your draws are coming from your profit and not from losses,
Mhm.
which should
Yeah.
be the case. But often that cash can't be found anywhere. But it's more of a paper game, I guess.
Yeah.
But in any event, how do you, like, for those individuals who are single member LLC owners? Is there anything specific that you recommend for like how they take their owner's draws leading up to the sale of the business, or is that less relevant because it's all profit anyway?
Yeah, it's really not relevant because it's essentially your profit for a
Yeah.
single member LLC. When we look at the profit and loss statement, the owner's draws aren't on or should not be on a P&L as
Mhm.
an expense. You just have your net profit and then your draws come off there. So that's not an issue really. So take your
Right.
draws however you want to.
Yeah, yeah, excellent. And there, yes. So that's why the balance sheet is so important, and that's why it's so important for people to understand how to read these financial statements.
Mhm.
Um, what advice do you have for people who want to increase the likelihood that their business will sell? Is it to hire a guy like me that can help them install systems and processes? Is it to ignore a guy like me and to consult with someone like you first, who will tell them to come back to someone like me? Like, what is your thoughts about that?
Yeah. So I think the first step is really just understanding where you are, right?
Mhm.
So a lot of business owners, will do Google searches on the internet about like, what's my business worth and is my business sellable? And we know that everything's on the internet's true, right? So
Exactly.
yeah. So I think really the first step is engaging a professional that can give you a true assessment of your business,
Mhm.
what it's worth today, and what are the specific factors or drivers of value that will increase your business over time.
Mhm.
So we've identified about 14 different drivers, either drivers or decreasers of value, depending on every business. And I find that like there's 1 to 3 that are really important for each business. They could be
Give us
process.
like three of each.
Yeah. Yeah. So like processes and systems is a big one, right?
Yeah.
Process, especially when you're talking about owners that occupy a lot of seats in their business,
Mhm.
having some processes and systems in place, the transferability of that is really key. We talked about another one is profitability. A lot of small businesses run at lower profit margins than their
Mhm.
competitors in their industry. So looking at profitability and maximizing profit. We talked about books and records, right? Making sure your
Yeah.
books and records that could be financial and legal are taken care of. Um, I talk about the staging of a business too can be really
Mhm.
important. And this isn't like, yes, it's important that if you have a physical location, somebody walks in and it's staged properly and it looks
Right.
nice.
Yeah.
But more important than that, everybody shops online now and it's no
Mm.
different for businesses, right? So,
Mhm.
what does your staging and your reputation of your business look like online? And not
Yeah.
just reviews, but from a marketing perspective, a technology perspective, does it look like your business is being maintained, or was your website built in 2005 and hasn't been touched since then?
Right.
So there's like I said, there's 14, but typically we'll find in that assessment like 1 to 3 that each business should be focused on that's really going to improve their value. So
Yeah.
yeah.
Yeah, no, that's those are actually excellent points because it's so funny. So it's interesting to hear someone like you who worked with businesses toward the end, because when I work with businesses like kind of at the middle stage where they're trying to grow revenue, grow profitability, put systems and processes in place, so I can transfer them to someone like you. These are exactly the things that we talk about,
Mhm.
organizing themselves so they can kind of be put in this place. And it is amazing how people just there's a lot of internet warriors out there in business, and you would think that business owners would be more sophisticated when it comes to sourcing information. And so maybe they're not bad at sourcing information, but they're not great at distilling the type of information between good and bad, right? Like what is good information, what is bad information, and then making a decision on that. So I'll give them a benefit of the doubt about sourcing information and just say maybe it's a sifting issue, when it
Well,
comes to that.
I think it's hard too. There's so much information nowadays, right? Like,
Mhm.
I mean, we're talking about internet, podcasts, books. I
Mhm.
mean, I wrote a book. Everybody writes books now, right?
Mhm.
Video, all that kind of stuff. And I think, one of my friends told me once, and this is a piece of advice I share everywhere, is that you can't learn all the hard lessons yourself through life or your business career. And I think as entrepreneurs by nature, we're self starters. We want to learn ourselves. And related to that information sifting, we would rather sift for hundreds of hours of information to try and be independent and do it ourselves rather than ask for help.
Mhm.
And I think ultimately, if we ask for help, if we seek out experts that have done the things we want to do before related to exits or other things, we're actually going to get there much faster than trying to sift the vast database that is Google for what's right and what's not, because who knows what's good information or not if you're not an expert in that specific thing. You're never going to be able to determine whether this fact is good or not if you don't even know what you're talking about. So
Yeah, no, that's a good point. And business owners like the nonstop process of self-educating is good, and that's why know, like, and trust factor is important for professionals like you and me who are distilling this information and getting quality advice. To your credit, you mentioned that other exit strategists, business exit strategists like yourself, would advise against or don't enter into the fray at a certain dollar amount and value in business. But I think that's a differentiator between you and these other individuals, right? Which is that you understand that there's value in all business, no matter how big or how small. And it seems like your interests are aligned with that of the business owners themselves, regardless of how much revenue they make. And your decision, I'm assuming, may be yes, no, or hold them for a bit. But like at the end of the day, business owners want to know that they have an option to be able to exit out of their business if they actually absolutely need to.
mhm.
Um, what is so where do businesses start if they want to even start this process? Where do they go? They go to, sellmybusiness.org or something and list their business for sale. Like, how do they even march toward the sale?
Yeah. Like I mentioned, I think the starting point is really having evaluation, or we call an exit assessment, done. So our company Exit Factor does do that as a service. You can also engage business brokers to do a broker price opinion for you as well. But I think what the valuation and the exit assessment does is it gives you a starting point, and it also helps identify like what's working in your business and also like what's not working or what needs an operation. It's kind of like what you did with testing the market without having to go through the full process. Like this is like a 2 or 3 week process to turn around that opinion or that assessment. So that's always, and I say, even if you're not thinking about selling, it's just a good litmus test. It's like, hey, what is my business worth? And is it, is it sellable to, the type of buyers I'd want to sell right now to? Is it, going to be worth my time? Like we talked about of, what's that minimum value that I want to receive as an owner? But I think that's always the starting point. It doesn't matter if you're a year out or 10 years out.
Let's talk about the emotionality of selling a business that a person has run for some time, and at times the reflection of, in their opinion, of the value from a person who's buying it on them personally, and how they feel like perhaps the offer that was made is an insult to them as an individual. How do you coach people around that?
It's very difficult. Like, look, we talked about this. I started at the top is a lot of people treat their businesses like a baby. And I did with my first business too, right? It became an extension of myself, and I confused my identity versus my role as an owner of that business, right? So I would take things very personal. And I think a lot of owners do that. But I think if we step back one and we look at this is an income producing asset. It's not part of our family. It's not part of us. It's just an asset that we've built over time. It's very hard, but having that objective, objective mentality towards the whole process is really what will get you through not just the price negotiations, but when a buyer points out things that are ugly about your baby, right? And things that are wrong in your business, like the choice to look at it objectively versus taking it emotionally. And I say that, and I know that is a very difficult thing to do, and it's very difficult when you're in that moment. But if you can stay focused that this is an income producing asset, this is not part of me, it's not a reflection on me, then that's super helpful. The other thing I always tell our sellers too is put yourself in the buyer's shoes. Like go on, some of the websites and look at buying a business, right? And it's funny that like when they look at what their business is worth versus what they would be willing to pay for a competitor, they're drastically different, right?
Exactly. Yeah.
But put yourself in the buyer's shoes and look at your business as a buyer would too.
It's so funny that you mentioned that because, we have this thing where we think we're better than everyone at everything oftentimes. And it's because it's like you said, it's so close to our heart. It's our baby. But other people are not that emotional about your business. No one is as emotional about your business as you are. So, I mean, it's a really good point. I mean, that you made, because a lot of business owners actually, they feel that way. And, I find that interesting, and it makes sense because and maybe sometimes like the longer you spend in running a business, maybe that's the issue. Maybe it's okay. Well, if we knew that we were only going to be in business for 3 to 5 years as opposed to 20 to 30, then we would have less strong feelings about it. Or maybe if we had diversified our investments and that was just one piece of an overall portfolio of investments, you would feel less strongly about that one piece of your pie that makes up your total income. And it all depends. So you built and sold 4 startups. What were those?
So 2 were in the wine and spirits education, or sorry. So there's 3 components to the wine sales that I did. So one was an education company. So what we did is we certified sommeliers and professionals like that across the country. The other part was a retail and luxury wine collectors business. So we sold high-end wine to collectors all across the US and Canada. And the third was like a custom engravings business that was like a product version of the wine business. So we did custom wine bottles, custom gifts, things like that. And then the fourth was a virtual assistant company that, for full disclosure, I sold to my sister, right? But it was an exit of itself too. So,
all right.
Yeah.
So, and when you built those businesses, was the goal to business flip and to sell them, build to sell, or did you plan on holding them? What was your goal?
So when I started the first business, which was the retail wine operation and collectors division, I knew I was going to sell it someday. Like I was 25, right? So I didn't think like I was going to sit there and serve wine at decanted for the rest of my life, but there
Mhm.
was no built to sell like strategy, right? I didn't
Mhm.
know that going in. So I knew intuitively that I would sell, but I never actually did anything or prepared for it. And
Mm.
that through the exit of that business was what introduced me to M&A. I got started in small business mergers and acquisitions immediately after that sale. So the
Right.
rest of the businesses were positioned for an exit from day
Mhm.
one.
Mhm.
And I do see that maybe not to that extent, but once a business owner does go through an exit once, it's kind of like selling a house, right?
Yeah.
The first time you buy or sell a house, it's like the most important thing in the world to you. And there's a lot of emotions, but you go through a second one, a third one, you develop a process, a strategy, and it
Mhm.
becomes more objective to you over time. So,
Is there any key system that you think that all businesses should have in order to sell at a higher multiple? Because at the end of the day, it's all about increasing that multiple and doing everything you can to get that multiple up. Is there, and I'm not looking for a magic bullet here. Like this is, and this will definitely do it. But like, is there a commonality in like certain systems that businesses have in place that give them the extra 1 or 2 point multiple?
so not in the multiple, right? So the multiple is highly dependent on your industry, the size of the business, and then how your business is built.
Hmm.
But there is a strategy that's common for earnings, right?
Hmm.
And maximizing your earnings will maximize the value, right?
Hmm.
So and earnings, the key system you have to have in place is you have to have key clean financial books and records.
Yeah.
So and you've got to use an up-to-date accounting system. Like QuickBooks Online is probably the most widely used, right? But you have
Hmm.
to do that. You have to close out your books and reconcile them at least every quarter,
Hmm.
preferably once a month. And if you're able to do that,
Yeah.
you'll show better earnings. And that's
Yeah.
that's key across any size business, any industry, any stage. It's just, I won't say it's a requirement because there are still businesses that sell with shoe boxes full of financial records. Do
Right.
they sell for $1 million? No, right? But
Right. Exactly.
all successful, like what owners would consider a successful exit, they all
Mhm.
have strong processes and systems for their financial records.
How long on average do business owners often agree to stay on to help out the new business owner after they sell? In
Yeah.
your
So
opinion?
that's highly dependent on if you've prepared in advance. So if you
Hmm.
haven't prepared in advance and your role's not easily transferable to a new buyer or you haven't removed yourself from the business, you're going to be looking at staying on. Now the average is a year
Hmm.
because if a buyer uses SBA financing to acquire the business, which 60 to 70% of buyers will, the SBA does not allow a seller to stay on for more than a year. So
Mm,
that's why the average is a year, right?
interesting.
But if you've designed a business that's transferable and operates without you, I mean, that period could be a couple weeks, a
Yeah.
month, you
Yeah.
know? So, yeah.
Is the owner typically compensated for staying on by the buyer, or is that negotiated as part of the overall transfer of consideration?
Yeah, so there's two components for transfer. The first is the training period, which is
Mhm.
usually included in the purchase price. And that
Mhm.
training period could be 1 to 4 weeks. It depends on the complexity of the business and the business owner's role. The second part is an extended transition period. That part is what can be up to a year, and that's usually paid an additional consideration, usually as like a contract employee or a consultant.
Yeah.
Yeah.
Have you heard of this? So a buddy of mine owns an HVAC firm. They just crossed the $7 million threshold.
Hmm.
They're working their way toward 10. And one of the things he told me about is this strategy that's, I guess, taking place in the service industry, home service industry, where they're selling the majority of their business, retaining something like 20% after they've sold almost all of the business. And of course, this has happened a lot, but like um, staying on, helping them become even way more profitable than they were, and then almost getting their exact same buyout figure that they got initially the second time around with that minor stake. Or he said buying the 80% back and getting back in after they scaled it a bit. Have you seen anything like that?
Yeah, so it's called the second bite of the apple strategy, and it's
Mhm.
popular with private equity firms, right?
Mm.
So there's pros and cons to both, right? So if you do sell majority equity, but not 100% equity, typically you're not going to get all the cash down, right? So when you
Hmm.
close, you're probably going to have some type of earnout. You're going to have some rollover equity. Like you're not going to get that full valuation. You're not going to get that in cash.
Right.
It's going to roll over.
Hmm.
And the second like obstacle is now you're in a partnership, right?
Hmm.
Essentially, you're in a partnership. You haven't exited. And then the third piece is that second bite of the apple strategy is not always successful. Probably
Yeah.
the majority of the time, it is not successful, right?
Right.
And because it is very hard to do, right?
Hmm.
It's hard to like look. We talked a little bit about small business, but 97% of all businesses are worth less than $1 million.
Yeah.
And then if you go more than 5 million, it's less than 1% are worth more than $5 million. So now we're like in a statistical game that like it is very difficult to sell a business.
Yeah.
It's very difficult to sell a business for $1 million. And if you're trying to scale and sell it for 8 figures, 9 figures, 10, that is statistically nearly impossible.
I hope you folks are listening to this. This is brilliant advice, and that's whether or not you're generating 7 figures too. By the way,
That yes,
sorry.
exactly.
Keep
Yeah.
keep going.
Yeah. So it is a strategy. It's called second bite of the apple, but
Hmm.
there is some pros, especially if you want to stay engaged as an owner, you want to help and build and grow that thing. You're not facing burnout. You have plenty of energy left to give.
Yep.
It's a strategy worth pursuing.
Hmm.
But there's a lot of cons too.
Yeah.
So
Awesome. No, that's great. So your point about the margins, the profit at the end is so important, because if you think that your business needs to be generating 7 figures to get 7 figures in a transaction, I think you're mistaken. I think you have to run a good business that has good margins, and then with good financial records, and then you're more likely to get a higher multiple, like to your point. And your business does not need to earn 2 7 figure gross incomes in order to get a 7 figure buyout. You just
yeah.
don't. And there are companies out there that are generating 7 figures that will not see 7 figures in their buyouts as well.
Yeah.
So having a business that is a well-oiled machine that produces gross profit in the sum that we're talking about is really, really important. And getting rid of the ego game, I think, is really important. Like separating the owners from the egos, like about how much money they need to have on the top line versus running a good business that actually has good margin, right? If you're generating $500,000 a year, but then your gross profit is, $350,000 a year, and you get a 5 times multiple for that, well, how much money is that, right? Like that's what we're talking about. That's it's a solid business.
Yeah. It was funny. I was just on one of our peer groups, and we were talking about a situation with a business, but somebody threw out the mantra of more revenue, more problems, right? So actually, most buyers, right, would rather have a smaller revenue business with higher margins than a larger revenue business with lower margins, right?
Oh man, that's gold. Yeah,
Mhm.
absolutely. I completely agree with you. A nice, well-oiled machine that's generating, you're right, between $200,000 to $800,000. I mean, it really is about. It's really about running a good business, and like that is the most important thing, because that's just basic blocking and tackling. That's the stuff that you do every day. That's like putting pieces in place, like is playing 4D chess, is putting together a good business strategy for operating. If you're a good operator, I mean, you're absolutely right. That's the name of the game. And scrambling to become a good operator when you're like 2 to 5 years out is a is a problem, right?
Yeah.
I think that's absolutely hilarious. Um, what perhaps you can give our business owners and entrepreneurs listening to this um, one golden nugget to take away to get themselves prepared in the direction of getting their business ready for sale? Like what takeaway can you give individuals listening to this podcast today?
Okay. So I'll go super tactical with this one. It's not one I share very often, but we've been talking a lot about profitability, right?
Yeah.
So I'll give an exercise that we walk all of our clients through when we first engage them to maximize profitability. So Whether you have a bookkeeper, accountant, whoever handles your books and records, that's great. But what I want you to do is pull all of your P&L, all of the individual financial transactions that hit your bank account for the last quarter. And looking at every single transaction, ask yourself 2 questions. 1, is this expense still necessary in my business? And 2, is it still working for my business? And if the answer to either of those questions is no, get rid of it. And what we do is typically we'll see an immediate profit improvement. Actually, when I did it for the first time in my business, we improved our profit by 40% in the first quarter. So we have expense creep in our businesses, just like we have personal stuff. And it's a really super easy one. You just probably need to spend a few hours, maybe a half day going through that process. And then I like to redo it every quarter, at least every year. To go through and prevent any of the expense creep.
Yeah. No, that's so smart. And it makes so much sense. And, I don't know. I think sometimes people overthink business and they end up, paralysis by analysis, the whole thing. But like, they think that there's some kind of magic way to do it. And it's like, it's literally, if you had a W-2 job and you had to balance your own household budget, but you're just doing it. Your W-2 job is just generating something for the market that people want to buy, and you're just managing the revenue that comes in versus your expenses. Like, you got to think of it the same way. And your goal is to just get as much of that take home as you can, so that when you call it quits, you can sell it to somebody who is willing to buy it.
Yeah.
That was awesome. So I want to have you back on again because I want to talk about what we talked about before earlier in the show.
Yeah.
Yes, the business flipping, because that is you see so many people start doing business flipping. Well, they try to do it, but there's a good successful way to do it, and it doesn't require a lot of cash if you have a motivated seller, just like real estate. If you have a business owner who's not a great operator but motivated to sell and they have all the assets, you can get in for almost nothing. Build the business and then flip it yourself. I mean, there's so many strategies. So I'm going to have Jessica on again to talk about business flipping, because I think that's a great way for people to make money, as just like in real estate. So we'll have to schedule that because I'm excited about that.
Yeah, me too.
Where can our viewers find you?
Yeah. So if you go to exitfactor.com/podcast, we've got a landing page with a couple free offers, but my email's there and all my social media handles, you can connect directly with me there as well.
Awesome. Very nice. And of course, all that information will be in the description for this podcast, both audio and on YouTube. Jessica, thank you so much for your time today. I'm excited that you came in. And yes, we will be scheduling for the business flipping segment. That's going to be so cool. So
Love
much
it.
fun.
Thank you so much for having me.
No problem. All right, folks. Well, before we go today, I want to first thank you for tuning in to the show. But I also want to remind you of something. I want to remind you to sign up for the newsletter that I publish each week. In that newsletter, I share exclusive tips and insights to help you take your business to the next level, how to turn your business into an income-producing asset, and move your business toward that profitability that Jessica was talking about, so that you can then call her and you can get that business sold. Plus, as a special bonus for my newsletter subscribers, I'm offering you a free version of my business stress test that I use in my business coaching program. If you're ready to take your business to new heights, head over to www.thecommonsenspodcast.com and sign up for my newsletter today. So there is that offer for you. And I think you're going to love the business stress test. It's a great way to figure out where your business is and to see what systems and processes you need to put in place so that you can kind of get your business structured and get it ready to sell or to grow and scale. So that's it for today. I had a great conversation with Jessica. She is very knowledgeable, as you saw, about business exiting strategies. The business flipping one is going to be epic. So you need to come back for that. And I'll let you all know when that's actually going to take place, because we'll get that thing scheduled. Until next time, if you don't go into work, let's try this again. Until next time, if you don't go to work on your business, you're going to be going to work on someone else's business. Have a good day. Take care.